Today, we are looking into digital banking technology. We have already covered the two videos which are on defining your digital bank, which is more of a understanding of the vision for the digital bank you want to set up. And second is what customer segment you are looking into. We discuss about which area you are selecting it and how the competition is there. The second video which we have done is more of a selecting the right core banking application on cloud, which is very different than the conventional bank. In fact, for a digital bank, we have to take care about the cost and going directly to the core. So we discuss some of the areas when you are selecting, which is 12 criteria, and this video is also available in my channel. Now, today, when we are going into the this upstream and downstream, core has already been discussed, so I'm not discussing into this video. So first we have to understand that what are the interaction area or what are the channels where the customer is interacting with the digital bank. So the first thing is that it is not very different than the normal conventional bank. The only thing is the conventional bank is having a huge branch which provides a lot of services to the customer directly. But in the case of there is no branch, in case of digital bank, other channels are remain same, and that becomes more appropriate because the people cannot be able to come to the branches. So what are those? Those are mobile, like your mobile banking, which you are using in a digital banking, your web banking you are using into the digital banking, you are using the chatbot, which is very important, whether you are on an app or on a web, there is a chat box comes into. And now this is a conversational chatbot. So you can have you can send a message and the machine can be able to answer you. Like I can give you the example that I want to know how much I spend in a last 1 month average basis for my restaurant bill or spending. So the chatbot can give you the answer this much. So that is called conversational chatbot. Of course, many digital banks are giving the opportunity to have even the legacy banks as well, that it is on a audio base. So you can speak and you can directly ask the question and the machine respond you, rather than it is on a text written and a text going on and answer is coming through the text. So it can be on a voice base as well. Now, the other thing is the contact center. So contact center, some digital bank take the kind of view that we don't need it. Like people says that is really BNB is having a contact center, is really this Uber or Grab, they are having a contact center, or TikTok is having a contact center, or Instagram is having a contact center. No. So today, this is a very much into it that should we be spending the cost for the contact center or not? In some cases, maybe yes. In some cases, maybe no. It's all about what is your strategy you have designed for your customer segment, your country, the maturity of the customers. You can be able to avoid the call center, which is physical people sitting in a call center. The other one is your credit card terminal. So when you go to any shop or anywhere, you are putting your credit card on the top of the machine, whether it's a wave or whether it's a really you insert and put the PIN number, whichever the you have the option. But this is a machine where the customer is interacting with. The other one is the ATM. Quite often you see that the people are, especially in Asia, the cash is the king, and a lot of people, society is on a cash basis. So a lot of people want to go to the, especially in a weekend, to the ATM and draw some cash. Or even they want to deposit in a cash as well, because on a legacy bank, this machine can deposit as well. But in a digital bank, it is only a withdrawal. Deposit, I will come, I've already explained into my channel video that what is the mechanism some of the banks has taken. But as far as withdrawal is concerned, ATM is the channel. The next very important channel is messaging. So it can be a messenger, it can be email, it can be SMS, it can be WhatsApp. A lot of banks came up with the WhatsApp banking, which is selecting some of the menu items, and the machine can be able to give you the answers. The other thing is that it is going for an email for your statement, email going for your advice, any of the advice you did the fund transfer and the bank want to send the message to your email or to your mobile, or they want to show on a screen and say you want to save. Whichever the way is, this is called messaging. So I'm not saying just a message, but all the messaging when digital bank is doing with the customer, there is so many areas where this is supposed to be done in each of the every product. So it is not can be a one product or two product or three product. It can be various products. You can basically implement the messaging system. So this is what is the interaction with the digital banks for your segment or chosen customers in your own geography. These channels are very much appropriate. You cannot avoid it because this is something that every digital bank when coming up, they are providing. Now coming to you is another area which is we are talking about the upstream and downstream. So it is very difficult to explain in a sense that what is the upstream, and through this slide I can be able to show you what is the meaning of upstream and downstream. So when we are talking about the upstream, you can see, and we have taken example of customer or account origination system. Like any customer you are originating, whether it is account, credit card, debit card, whatever, there is an origination system. So when you are going any customer on your mobile or web app or whichever the way is, it is basically there are 5-6 applications are very much required by the bank just to originate the customer. So it can be eKYC. eKYC is a KYC, know your customer. And when you are opening an account, many countries have a different regulation from the regulators. So some countries are having a very smooth way, means that they are having either a physical IC or ID card. Some are having Aadhaar, which is India, where they can send a card to the this organization and verify immediately some of the details from them. So it is very important that the customer is doing opening an account from your mobile or web. And so you have to create an application where you can be able to take the maximum information to open the account without any physical interaction. So KYC is all about providing the basic information. Your picture should validate into your they can validate from your app or web. You are facing them and you can take the picture and they verify sometime with your ID card, or in case of America, social security card. So this is something that they want to verify. Also, they can verify with what the chip is holding the card, and around between 10 to 20 informations are there, like his birthday, his actual name, his address, and all other, and it can be captured through that card. Depending on the country and depending on the card and depending on the chip, what giving you the functionality. However, certain countries are basically you can see, you can take a mobile and show the card physically. So this app can recognize the card and read all the information from the card and then take the photo of the card as well. Second, so when you are doing a simple personal account, maybe the information is less required. But when you are going for a business account, a lot of documents are required, like your business registration document. They want a document which is like maybe some board resolution to open an account, maybe other details. So that will not go away. If you have a business account with the digital bank, you have to go through with these documents, and there is a way that you can be able to download through scan these documents and attach to your app and web application, so that they can be able to go through with these documents before opening your account. So personal account can be opened immediately, because if all the document and all the verification has been done, it can be opened immediately. But the business account sometimes takes time, because the documents has to be verified. And why this, like sometime even a personal account takes a little bit of a time. And the reason behind is that on a background, a lot of things are happening. Like here, you can see the application called ID or name screening. So name screening is all about PIP, maybe the blacklist naming, maybe other naming issues. So sometime, or the terrorist name, blacklist naming. So all this naming screening happens online. So they send it data to the database, and it verifies that your name is not one of them which is in that database, and they immediately can open an account. Same as credit scoring. So if a guy is coming and along with the opening account, might he is asking for a credit card also, or might be he's asking for a debit card. So whichever the way, the credit scoring is the most important in most of the countries. So there is a credit bureaus which you have the connectivity with them, and you can be able to send the information about the customer ID or social security card or the tax number, and they can provide you the complete sort of credit scoring of that customer. You can have your own mechanism as well, in a sense that if you are getting a more information, like at the first stage to open account, may not be lending account, maybe a simple saving account. They need to basically know that what is your salary, which organization you are working with. All these kind of things, if you have provided it to them, might be they can do early credit scoring with their own system. However, the application is on a front, back end there is a system is working. So this application called Upstream, which is the connector to the customer. But on a back end, there is an application which is basically providing all the information, and usually it can be from a core banking system. It can be from any other application as well. So core banking and downstream works together very well to support this upstream or customer connector areas. So this is called application, which are, we call it upstream. Here it is just a 5 application. It can be 20, it can be 30, it can be 50. The number of application can be there, which can be connected to them. Because we are talking about customer origination or the account origination, that's why there is a very less number of application. We are not talking about the processing. We are not talking about the management. So when we do processing and management, a lot of application comes into, means that if you want to reduce your credit card limit, there is an application which is supposed to do that. If you want to block your credit card, it is another application which is working on. If you want to enhance your ATM limit, you have taken less actually, you can apply for to enhance your ATM limit as well. So all this I'm talking about, which is more of a management and processing rather than origination. So origination, maybe 5, 6, 10 application is important. Now, this translated to the products and service. So behind is the product. So what is the product? Product is a saving account, current account, wallet account, a business account, credit card, debit card, ATM card, overdraft, fixed deposit, kind of various product can be. It can be. So digital banks are having usually less number of products. And that's my experience when I'm searching somewhere around more than 100 digital banks. And I found it, the most of the banks are giving the less number of accounts. Like I did a thorough study of a UK 3 kind of best digital bank, like Monzo, Revolut, and Sterling Bank. All 3 are fantastic bank. In fact, out of 3, actually 2 are in a profit. So that is pretty good in a sense. Usually digital bank takes 5 to 10 years to come into the profit. So when I saw that, except Revolut, which is having a more products, Monzo and Sterling Bank is having a limited products and limited functionality, in fact, as well. Revolut is in more than 30 countries in Europe, now in US, and same Sterling has gone to the, and Monzo is going to the US market as well. So the challenges are there because US market is very different. So when we compare it to the digital bank comes with the very limited. So if it is a first time bank is going in, might be it starts and launch with a deposit account only. However, when they are going in a deposit account opening, they have to have a withdrawal mechanism, which means that they should have a debit card or the ATM card. So that is must. They have to go with the complete back-end system, means they should have a core banking, they should have a regulatory reporting, they should have a finance system, they should have a connectivity with the clearing system, connectivity with the ATM switch, white label switch. So it is not easy in a sense. On a back, there is a lot of things. But on the front, usually they go for a, say, deposit. Next year, they go for a lending and credit cards. So mostly the lending and credit card is unsecured, non-secured. What is the meaning of secured and unsecured, and what is the difference? Unsecured is all about credit card and your loan, personal loan kind of thing, a small loan kind of thing, or the advance against the credit card, which is not protected by any asset. Whereas the secured one, which is more of a mortgage, where your property is an asset and that is against your loan. So that is the difference between the unsecured and secured, and the unsecured digital bank goes first. And very less number of digital bank has gone for the mortgage. It is a area where they are not really very aggressively want to tackle. So they are going into the more of a unsecured area, which is the demand of their customer segment, which they are targeting, or more unbanked, or people who are very much careful about the interest rate, FX rate, and other services. So they are usually going for a deposit and lending. So these are the applications are required. When we go to the gateways is different. Like in a sense, it is interacting with maybe 2-3 applications at one time. So it's not necessary that it's like your credit card switch is talking to you maybe on a multiple level. Like when you are issuing a card, you are connected with the one way, but you are going for a chargeback, means there is some customer saying this is not my transaction and going for a chargeback. It is a different, maybe the application. So maybe the application you are having on a chargeback in a separate environment. Same as collection. if some card is gone on a, like really not returning the money or not paying you, there's a number of people usually in a legacy bank. But when you are going on a digital bank, you have to find out a way how you are continuously corresponding to the customer to make sure that they should return the money. So ATM, Visa, MasterCard payment, which is a vendor payment, like Monzo, I think, or Sterling gone with the Wise directly. So they are just connected with them and put up through their API, which is a public API of the Wise. They're putting into the screen of their system, and you can use the Wise payments. So those are the gateways. Those are the gateways in a sense. You are using the voice system and the SWIFT system. Like when you are transferring the money from one country to another country, the one way is basically you are nutting off your own account. So I discussed, I think, in one of the video already, what is the netting for the digital bank or any bank as well. Because when you are transferring small amounts to a lot of countries, and which is more of the laborers working in one country and want to send it money to the other country, they are having a netting between the two. And the last one is connectors. So connectors can be a credit bureau. So it can be more than one. It can be consolidated in one. Maybe there are a number of one. Bank have to choose which credit bureau he's using. Some countries is mandatory that you have to choose the one public and one regulatory. So it all depends on what is your regulation, and you have to make these connectors. Clearing, if the check is going for the clearing in digital bank, there are certain banks which has started called digital check. And digital check in the US for the long time. Like people can be able to issue a check on their digital device. So digital banks are basically having some of these checks on which supposed to go for a clearing. And so nowadays it is immediately. It is a 3 seconds job, in fact, in a clearing, where the old days on a legacy bank, when you're issuing a paper-based check, usually takes a 1 day. And actually the bank takes to do 2 days or 3 days because they want to carry the money. So when they carry the money, basically they are taking the overnight benefit of that cash. ID validation, so there are some connectors like Aadhaar is one of the example in India, or Singapore came up with a kind of virtual ID where you can be able to send the information to the for the validation, and this government which is issued a ID can be able to return you that what it is. The same is in Pakistan. I saw, in fact, the for a small account or the digital kind of payment companies, they allow it to send the information to national ID card system, and they respond back to you and validate the information whether this ID and name and address validates or not. So why I'm telling all this? The basic things you understand is when you are saying application is on a back. Connectors, I've showed you 7 or 8, which is on a front where the people are using it. So people are not knowing that what application. Application is for the bank. So bank has to know that what application they have taken, like CRM. CRM can be front end and CRM can be on back end as well. Usually on a conventional banking, CRM has been treated as a back end or branch CRM. So when the customer is in front of them, they can see CRM sort of customer 360 information on a screen. And a customer is asking any information, they can be able to provide that information very fast. But when you go to the digital bank, it becomes both. It becomes sometime that customer is asking immediately, what is my sort of last 1 week, how many transactions I have done. it can go to the CRM system and it can tell you. Some people uses the core banking system, that it goes to the core banking system. But my view is now with the new digital banking and the new mechanism to do the job, we have to use core banking differently. We should not put a lot of products into the core banking. Usually what we do is some banks, legacy banks or ERPs are having a complete system on a core. Means if you want to have a current account, saving account, deposit account, you want to open, it is there in a core actually. So my view is that when somebody is opening an account and he gets the validation, yes, your account has been opened, this is your account number, it goes from the core banking in a normal legacy bank. When you go to the digital bank, it is going through the CRM. So how it is CRM when it is just originating? I will discuss separately the CRM and data warehousing, where how online real time it is possible, and it is really on a cloud, it is very much possible that you can be able to store the information in a 2 to 3 places, and you have to decide thereafter that where you want to use it. So this is something I'm trying to tell you, that there is an application, then there is a product and services, and then there is a gateways, connectors and all on a back end. So this is the way the whole thing you have to see. There is no such thing called upstream. Means these are the application which are on a top, this is core, and this is a backend engine. So when backend application like finance and BI or data warehouse, it can be able to use for giving directly information to the customer, even not going to the core. So this old mindset, which usually I use also in a sense, there's a top layer, which is upstream application, there's a core banking, and this is the application which is called downstream application. Now what I am trying to do, just changing it to loan origination system. Like we did the account opening or the credit card or ATM card origination. Now we are talking about loan origination. When you see the loan origination, almost the same application works with the loan origination as well. There is no difference. It is KYCs remain same, credit scoring is same, credit profile is same, naming screening is same, document validation is same. So the question is that when you are developing your APIs and microservices, one microservice can be able to use for across actually. And actually the indicators are within the application, the message tells you that it is a loan or it is a current account or it's a saving account. So if you are asking, give me the deposit, my balance, system will tell you this is your balance. So whether it is coming from the current account, deposit account, or even loan account, how much you owe from the bank, it is on the same field. The indicators tells you that which is the product. So the product is a separate field and balance is a separate field. So when your API is going to the various application and searching the information, it is very fast, because whether it is a loan or whether, so when you are developing the APIs, it reduces the numbers of APIs. I was very shocked when I was listening one of the video of Monzo, where they were saying that they are having a 9,000 microservices. And I will show you in the next video where you will see that when we do the architect of the digital bank, how this fintech mindset comes into the picture rather than this way what I am telling to you. So this is a middle way. There's a legacy bank, there's a digital bank, fintechs, and this is my way, or you can call it the way which probably it is a mindset of the old thinking, but doing the way which is supposed to be the digital banking way. But when the people stop thinking about products, or they thinks about only the service, so then it is an issue, because if any banker coming into you, or even anybody is coming to you, whether it's a like drinks, or you are going to the restaurant, or you are going to the airport, or whatever, there is a product. So every industry thinks from the product side, and then they things convert into the service. But might you can directly think about the service and a microservice, and they are using like Go as an application, which is a very different application language. They are using a K8, which is a microservice development tool, and they are using the SQL, which is post CRG SQL. It is not MySQL, it is not Oracle database, it is not. So, and also they are using this called database, which is called Crescent or something, which is very new to me as well. So this is all research they did it. I'm not saying that they have just gone in a haphazard way. It is a fantastic organization. This is one of the best UK bank, in fact, and they have a huge. However, there is a limitation of the micro services. So when they will grow, and one day it will go to the 20 and 30,000 microservices, and then you have to feel that how you can be able to manage those microservices, in fact. So there is a mindset which is purely service or microservice, or what customer is asking and what I am giving. How you are treating it on a back, it is more about your language and your database, where you are working on a back end, like calculating the interest and all this. Now I'm coming on a service application. So service application is kind of a customer interaction applications, which is CRM, call center, chatbot, messaging. Already I have said bank statement, very like consolidated bank statement. The customer wants that all his loan, his all the three types of accounts statement, and the transaction should come into the consolidated statement. Sometime they give the opportunity to the customer to select that do they want spending criteria basis, means that you want to see the petrol separately, you want to see the restaurant spending separately, you want to see the shopping separately. They do this kind of statements, which is consolidated statement. Credit card rewards, very important, because when you are going for a credit card, there is a lot of reward mechanism they have to go for. There's a like people choose the credit card on the basis of rewards, and so we will discuss at some time that what kind of reward, whether it is a traveling, spending, like shopping, and all these kind of various rewards they offer. Conversational chatbot, already spoken. Mobile app and web solution, or the web application, we have already spoken. Now I'm showing now to you, before I should go for each product architect, which is my next video. And if you, here I want to show you how difficult to make a one chart of architecture for a digital bank or any bank. It can be not be a one page. So I'm showing you here credit card architecture with the core banking, in a sense, because some information is on a core banking, some in a credit card application. Application can be 2, 3. It can be connected with the 1 or 2 connectors. But what are these 27 different areas where you have to provide the architect and service to the customer? I mean, I'm not going into the, like already 6 or 7 I have already discussed in this origination level. But there is a FX, means that when you are doing the card is being used, there is FX involved. Chargeback, I have already spoken. If there is a some dispute, you have to go for a chargeback. Bill payment, you are having a billing, landing interest rate. You are going for real-time transfers. Obviously, the credit card is always a real-time transfer. And sometimes you take the treasury risk. What is treasury risk? Like when I was looking into the Revolut, I found very interesting thing is that they say that weekends we will be expensive on FX and they charge more. And on normal days, if you are doing a transaction, they are charging differently. And what it means that they are putting up a risk portion into the FX rate. This is called treasury risk, because that market is not working. Whatever market can go up or market can go down, they want to cater on the basis of some average they have calculated. They are charging more. So if you are looking into this called notification, so if each transaction you have to done, customer has to receive the notification if he wants a notification from the bank that you have done this much of transaction, or the bank you have told to the bank, if I'm doing more than a $20 credit card transaction, then only you have to inform me. Usually 25, because chargeback is usually on a Visa and Master is $25. So $25, if it is more, you have to tell me. If it is a 3-day verification, any amount, basically they are liable of. In fact, the customer is liable for that, because he is getting all the authentication or PIN code or whatever during the transaction. Now, CRM is another area where all this transaction of a credit card goes into the CRM, which is the 360 of the customer. So how much transaction he is doing on a credit card every month, what are the averages, what is his spending behavior. So very interesting is the banks do a lot of BI. In fact, BI is only not the bank credit card BI, but also Visa and Master are having a very extensive BI tools which they provided to the banks. And it's not free. It's quite expensive. But what this tool you can do is you can be able to analyze thoroughly the customer behavior. And by using the customer behavior, you can be able to send the messages. So suppose that customer is on a shopping center. Your mobile basically tells through that location service software you are having that this guy is in a market where we are having 3 restaurants where giving the 10% discount on our credit card. So immediately the customer will get the message saying that you are in this shopping center. These are the restaurants. If you are going into, we are giving the 10% discount. Or if a customer is extensively spending somewhere, you can be able to do analyze and go back immediately saying that your spending is going very differently than your behavior. Somebody is spending so much in a restaurant suddenly in a 1 month. So those things helps us that where the people cannot be able to pay to the bank back. So I'm trying to say that architecture, when you are putting up for each application, it's not that easy. You cannot paint into the one page and say this is the digital bank architect. When you are going with the credit card to the debit card or the ATM card, you are having a very similar architect. When you are going to the loan origination system, you are having a very similar system, because product architect. Now this product architect converts into the applications. So when you are on a cloud, you should be very sure that those applications which are on a SaaS base or available on a cloud, you can be able to use according to your architect. The one side you have created architect, but on other side, you are seeing that, oh, I cannot be able to do it because on a cloud, this application is not available, or I cannot be able to do this piece. So what you do is you have to develop your own. So fine, you can be still on a cloud, but then you have to do your own. And there is a lot of application development supposed to be. Like I can give you the example that Revolut has started its business in 2016. Now they are having around 27 million customers across 30 locations. And when they have started, there was only 4 technical people. And the total team was somewhere around 10 to 15 people. Today, they are having more than 200 people. And around 100 people are just supporting operation and technology. So the more and more you grow, you have to sometimes develop yourself, because the application which is available is not suits you on a cloud, or that application is not whatever is available, it is applicable to you. So a lot of development, in fact, at the end, digital bank has to be started. Like in effect, Revolut also provides the Bitcoin account. So you can open an account with a Bitcoin. So none of the application is available on cloud. They have to develop this, and you can in cash through them. They are having a multiple of backend switches for the crypto, but whenever somebody is converting, they are making the money invest. In fact, and they can in fact buy or use for payment as well. And on the back end, Revolut has to make the changes. So what I'm trying to say is that it is not that simple what we used to do in legacy system. Digital bank is very different, and a digital bank is very thin and want to be very cost effective. Now the next thing which I'm showing you, the downstream application. Here I am just for the make a point that what kind of downstream applications are. One is a regulatory reporting. Of course, this is a very important factor when digital bank is going in. AML screening, all kind of transaction monitoring has to be done, whether it is a sanction monitoring, whether it is a transaction behavior monitoring, loan and account management. So one is a LOS, but one is a LOM, basically loan management system, LMS. So loan management system tells you a lot of other things, like in a sense that it can takes your statements and convert into the behavior. So lot of these things you can be able to do that. Finance, asset and liability management, and profit and loss management you can do in a finance. So it can be on a core if it is available on a core. If it is a ERP, definitely it is on a core. But if you are going and not selecting any good core banking solution, you have to develop your own finance system, or you should use some third-party finance system on a SaaS. Same as BI and database and analytics. This is a key of the overall business. You should know your business. Card BI, I already spoken. Treasury is very important, even the digital bank, because when you are transferring from one country to another country, or one currency to another currency, the FX rate is involved. Whether you like it or not, there is a FX involved. So there is a treasury. There is a treasury where you are basically maybe very small in a digital bank case. Then the data warehouse, for your keeping the data somewhere for the future analysis and all, you should be having somewhere the data warehouse, which may not be on a same level, and some data can be downloaded immediately, means that transaction happening in a multiple space, including the data warehouse. which is called online data gathering. Second is you can do the end of day, you can gather the data as well. So it's all depend on how you want to do it. And same as you want to put in the same CRM as well on a online or not, because when the customer is asking you some information, and if it is not going to the CRM, the system cannot be able to show. Then you have to end up with the core banking application where you have to take all the information, pass on to the customer. Now, these like 8 or 10 applications are just a very small number. I worked for a Standard Chartered Bank for 28 years, and I know it's a more than a 600 application we are having it. More than a 600 application we are having it. And when I was, this guy was talking on a Monzo, that guy said that we are having almost the 100 applications. So a digital bank is having 100 applications. And it's good that you are keeping the very thin applications for all each and every purpose. You are having the application, so you can be able to design the architect very well. So next, our video, this video was more of a upstream and downstream to explain. Already I explained it to the core banking, how you have to select. I have not gone into the functionality of core banking because the functionality is very different for the digital bank core banking than the actually legacy bank. So I have not covered it, but whenever we will go and try to do the analysis of any of the core system, the top 5 or 10 system which digital banks are using it, we can be able to explain it to you that what functionality is there. Like Temenos is having, Oracle is having, Mambu is a pretty good system as well. So all these systems which are already given system for the cloud base, we can be able to review it. But the next video I will do for the overall architect for the digital bank. It's a difficult job. I need some time. In fact, I did it twice, in fact, for the 2 banks. So it's not that I'm doing first time. And very interesting that both of the cases, the external large consultant have helped us actually to develop this architect for the digital bank. So I will try my best to combine everything and showcase one which is not a standard one, which is one can be not fit for everything. Architect is different for every bank depending on their product, their vision, their customer, their services. But we will try to put something as an architect to you. If you like my video, please subscribe this channel, and also click the bell icon so that all my videos should come to you. Please go through with my digital banking videos, which is around now 6 to 7 already I did it. That will give you the very good idea about how the digital bank is. Thank you very much.